video, I'm going to share with you guys the biggest mistakes that some new option traders make. So option trading can have big rewards, right? Some of you guys know, um, but it also can have some risks. So today we're going to learn how to avoid some of those common mistakes, and this can help keep your money safer. All right, so mistake number one is trading without a strategy. So if you have no plan, it can make it challenging to be more consistent. And the trading plan is going to help us to have emotional, right? Emotional rules. So whether you feel like buying at the wrong time or selling at the wrong time, this can help us to be more emotionally disciplined. And the next thing is no exit, right? Not knowing when to leave a trade can cost you money. Next mistake number two, choosing the wrong strategy for your outlook, right? So wrong match. So your strategy should fit what you think the market will do based on your fundamental analysis and technical analysis. Ignoring clues. So charts and, as I said, like technical analysis and some fundamental analysis can help provide some kind of hint of where the market might go, right? If it's not a good fit, your trade should match your market prediction. So if you think that the market is going to go up based on your analysis, then you could make a decision on that. If you think it's going to go down, you could make a decision on that. Right position sizing, right, and over leveraging. A lot of traders can deal with this a decent amount of contract, but then you could lose a decent amount. So we want to save sizing. So we want to only risk a small part of our money on one trade, right? So what I mean by the position sizing is if you look at chart, right, like say for example Robinhood, and you are choosing the amount of contracts that you want, you could choose, if instead of one contract you may choose 10 contract, and now you're risking a lot more money than if you had chosen just one contract, right? So too confident, right, with the leveraging. So thinking you can't lose leads to betting too much, right? If sometimes we think that we got this, is we based on our, based on what we think will happen, is good. Sometimes the market could go the opposite way. News could just can't come out, something happen, and it could just go the opposite way or something. So just make sure we want to make sure that we're positioning rightly, and then no limits. Always know how much you might lose before trading. Mistake number four, picking the wrong expiration date, right? So too short, not enough time for your idea to work out. So just right, perfect timing gives you your trade the best chance, right? Too long, right? More time costs money with. So sometimes when you get a further contract out, it can cost more money, but it can help because now you have more time for your analysis to play out, and it could go up significantly, or it could prove that you were wrong. So that's why we want to have like things like stop loss, things like that, so that we're protecting our capital more. All right, so mistake number five, lack of diversification, right? So one basket, if we put all our money in one stock and then that stock just tank, then we could lose all that money, right? But if we diversify and put it in multiple different stocks, you could even use like ETFs, right? Using only one type of option limits your chances, big risk. So without spreading out, you could lose everything, right? So mistake number six, neglecting discipline and risk management, right? So if we have no exit plan, we want to know where we want to walk away from the trade, right? So, and then holding losers, right? So sometimes if we keep trades that are not performing right too long, in this case, we want to make sure that we are limited the chance of losing a lot of money, snowball effect. So small losses can grow into big problems quickly, right? Start off with 2%, and then it goes to 5, and then 20, and so on. Take number seven, ignoring liquidity and trading illiquid contracts. So sometimes you can trade contracts that have low interest, so few people are trading, buying or selling it, and spreads gaps, and I put up an example of how I will hide it, and you guys can watch that video. It should be linked above. You guys can check that video out. So we want to make sure that We're avoiding wide spreads because big gaps between the buy and sell can cost you money, right? So stuck positions, you might not be able to exit when you want to, right? Make sure it goes into green, right? You want to make sure that you're making money on your money. So it is. We definitely want to make sure that we have some contracts that are more liquid and have more interest and low, smaller spreads um, between the contracts, between the bid and ask. Now, how to avoid mistakes? Make a plan, write down your goals and rules before trading, right? And what works, use strategies that make sense to you, right? Protect yourself, right? Spread out your money and know when to stay liquid so we could, make our money, make money. With that being said, guys, remember to like, share, and subscribe. Let's level up together, motivate some more people. Remember, for His glory. Peace.